Welcome to the Family Business Audiocast on LinkedIn. This is Artem Smith. I'm here with Rick Holton, a friend of mine and family office owner and investor and entrepreneur. Rick, it's great to have you today on the show.
Thanks, Adam. Glad to be here.
Yeah. All right, good. Let's dig in. I'll talk about you briefly to our guests, and then we'll chat a bit. So Rick is from St. Louis, where I'm from, and he is involved in philanthropy, civic engagement, education, and environmental causes. He is on numerous boards, including a board at Washington University in St. Louis, and very active in nonprofits there. He is also a former chapter chair of YPO in St. Louis. Rick earned a double major in engineering and economics from Vanderbilt University. It's a great school, and an MBA from the Olin Business School at Wash U in St. Louis. And then after his MBA, he launched his entrepreneur career and founded a company and became a top business in that space, and later co-founded another company called Classic Car Studio, specializing in classic cars. It's one of my favorite things in the world. Later, about 15 years ago, he began angel investing, getting involved in venture capital, family office business. He founded an early venture capital firm called Cultivation Capital, and then later built FinTop, where he is a founder and general partner, and then went on to work with his family at the Herman Companies, a significant family office in St. Louis, founded by his grandfather, Bob Herman. He recently served as chief operating officer and partner at the firm, and now he manages his own family office and direct investment company called Holton Capital Group, works with his brother Rob, and they actively oversee and support a range of investments. And recently, he invested in an independent investment advisor, Trilogy, which is delivering world-class MFO services to the market. So great. Really happy to have you here today, Rick. Why don't you tell us a bit about what are you working on right now?
Oh, right now I'm focused on family for a couple of weeks in northern Michigan. Just had a kind of a kickoff meeting for family council. One of the things that you steered me to talk about was, keep the family together. What's your why? We do a lot of that in YPO. So we had our first meeting to explain to the rest of the family members how the YPO forum experience works. So we're going to translate our many years of forum into family. Neat format. And, we're putting together a family constitution. So it's hard to take people that haven't done this stuff and get them up to speed. So we have a series of smaller meetings to talk about how to do it and why to do it. And, it's the family values, and it's really setting the culture in stone for what we want for future generations, which is why Rob and I put together Holton Capital Group to focus on the next generations. So that's sort of the family stuff. And then the work stuff, I've got, partners meetings and a board meeting tomorrow morning and all that regular normal stuff.
Sounds good. And from northern Michigan, which is beautiful, I see you occasionally in West Palm and St. Louis. We got to get you to New York more often. But I'm glad that you are already talking about the family constitution and the utility of that type of outline for governance and for legacy planning. Let's go back to what you're working on within the family office community with your family and some of the things you worked on there, and the type of sectors you focus on. We talked about agribusiness as well as wealth management. So tell us a bit about that experience, and then also about the founding of FinTop, which is a very successful venture firm. And as you know, more and more families are involved in venture capital or forming their own funds, which they seed themselves.
Yeah, it's a very um, wide and open question. I'll frame it, I think, best this way: is FinTop was a culmination of a lot of years of figuring out not just what I liked in VC, but also what I was good at. And, a very scattered approach from my earlier days of Archangels and then Cultivation Capital to getting focused and putting a focused team together. That's what FinTop became. We launched FinTop in 2016, and fintech has evolved a lot. We were one of really 4 firms that were fintech focused in 2016, and then a lot of other people started jumping in because it's a hot space. And for listeners that don't really know what fintech means, it's moving money and moving information that has to do with money. So the things that we focus on at FinTop, you think of insurance technologies and wealth management technologies, and we've also kind of gotten pretty deep because we built these relationships inside the office of the CFO, bill paying software, the wealth management. We've got, stock trading and accounting platforms and data management platforms. In bank tech, we actually have a bank tech fund. It's got 70 regional banks where the capital in it, and it was for them to have access to new technologies. Account opening is a big problem, and you've got, your know your client stuff, and there's all these regulations that regional banks just they get beaten up on fines and fees and compliance and all that. So a lot of the fintech stuff is in the financial services space and bringing efficiency. We don't try to replace people, but we help you scale without adding a lot of people because that's what those industries have typically done, just add more people. Um, but with that knowledge, it's helped us a lot in the family office space to get more efficient. And our vision at Trilogy is to bring the world-class multifamily office services to the mass affluent. A family office, you've been in this space for a decade or probably longer, but it's evolved from where you used to have $1 billion to have a family office. Then it was $500 million, and the new number is kind of 100 million to justify the overhead of a family office. And we want to be able to offer that MFO experience to people with $25 million, and technology is the way you can do it. And so it's kind of the merging of all this stuff I've been working on for the last 15 years, really. And yeah, so that's that. The blend, the Harvard model, of half public markets and half private markets to get better returns. I also think it's a lot more fun, but we do have a portfolio of direct investments, as well as public markets. And I don't do public markets. I like other people to do that. So the investment in Trilogy, they can handle the public market stuff. And then we're building out the private markets platform, which you and I have talked about, which is exciting because a lot of the family clients want access to that, but they don't know how to access it and they don't know how to underwrite it. So we've got a private markets team that we've put together to vet opportunities, and then managed assets. I believe in managers. I think good managers know what they're doing. They've gotten focused. Most of our money at FinTop is from family offices. So that's, we're kind of showing people managers, and we're showing co-investments with those managers and also direct source deals from our network, because we have a lot of YPO guys in our you know um, in our group. So we see a lot of stuff from other YPO members. People are trying to buy out their parents, or they find an opportunity to acquire a business from retiring people. You've got this, $75 trillion of wealth transferring down to our generation. Well, a lot of that money is coming from the people running companies that don't have heirs that are taking over the company, so they're selling the company to private equity. So the only way to get into that is by investing in that stuff for the wealth transfer. So that's all the positioning that I've been doing for the last few years.
That's good. Thank you. I think there is an undercovered topic in the industry, which I talk a lot about on the podcast with multifamily office partners and owners, and family office owners, and practitioners, and think tanks, and authors. There's a lot of discussion on succession and this massive transfer we see in the data from Northern Trust and Ron Diamond and Camden and JP Morgan, of course. But I think there is less coverage on the reality of lack of succession happening, and that there are more and more of the G0, G1 companies, like let's say older generation, old school operating companies, that just increasingly at the margin have less and less support or interest from the children to succeed the business. And so therefore, if the children are interested, as I've discussed in the show, if there's no interest from the children, there is no succession. There's either the continuity with outside management, or you sell the company because that passion connection is not there with the family. In that case, which we can talk about briefly later on our conversation, is the topic of legacy. As legacy is not defined by just the company or money itself; it's defined by how each family, each owner, right, defines their own legacy with their business. Back to FinTop, since you have come from the family office space and a wealthy investor group of investors when you started FinTop, and did you find it important to and more, I guess, facilitating and more efficient to talk to other family offices and LPs as opposed to institutional investors?
Well, let me state what I think you just said. There's some window noise on your end. You're asking why FinTop gravitated toward the family office space versus institutional. Is that correct?
Yeah, the family offices are, as you know, increasingly interested in investing with each other in direct deals, right? In operating companies and direct deals where there's like in the cap stack directly. But in a fund, I'm just curious about your experience raising funds for FinTop. I think you're on your multiple fund now. And what's that experience been like in coming from the family office background and being, a major position in the GP? Like, what that did that facilitate and make it a bit more, let's say, relevant or smoother on the fundraising front with those limited partners that are family offices?
Yeah, we got an early taste of what the institutional investor looks like, and it's about having as many meetings as you can and kicking as many tires as you can, just so you can say no, so you can report to the trustees that you said no to 500 managers to pick the one that's the absolute best. And emerging managers is not an institutional investor play. We had so much of our time wasted and money. I mean, we spent a fortune on going out and meeting with these people, and they just wasted our time. There were numerous occasions where we'd get flown up for the third meeting to New York just so they could have a 10-minute meeting to say no to us. It was pretty offensive, and we don't like wasting time. The family offices, if you meet a family office, we had a very unique value prop. All of us were operators. We'd all run companies, and we were 20% of the LP, which is not normal. We all had our own money. We were investing our own money, and we picked 20% so we could tell people we're doing this for the return on our investment, not the management fees on yours. that resonated with family offices that wanted exposure to fintech, but didn't know how to get into fintech. And so that's how we started, and we just built the LP base out of family. We have a couple of institutional investors, but for the most part, it's family offices, and family offices love to share opportunities with other family offices. So that's kind of how it played out. And you know, we're on our fifth fund. One of them's one of them's all banks, no family office or individuals, but four funds are from family offices, essentially high net worth and family office. So
Yeah.
that was the genesis of why we ended up in family offices. And we've gotten really good at asking the right questions to qualify, so we don't waste their time or ours, because we value both. And if that answers your question.
Yeah. Well, it's useful to hear that statement as well for many people to respect time on both sides. There's the LP and the GP. There's the time that the investor is spending and to help them focus. And of course, there's the time of let's say the principal side, which is valuable because no one pays you for that time. So that's a good point to bring up. Um,
Well,
let's
it's
move into
also
yeah.
hotel rooms and plane tickets, and
Yes, those are
you're
expensive.
sitting in you sit in, you fly to New York for an hour meeting, and a lot of times you can't be in and out in the same day, and you've got to be flexible if somebody has somebody else for you to meet. So we try to set a trip and meet as many people as we can. But a friendly introduction is always going to go further than a cold call. You're never going to get into anyone on a cold call. But the institutions, to have three meetings, and the third one just to call you back to tell you no, that's an easy Zoom. But they don't respect the manager's time, and that's because they're paid to say no. So it can be offensive. There's some that are great people, but we've just had a much better experience with family offices. And I'll tell you what else, some of our best deals come from family offices, because they're out looking at stuff all the time, and they've got their own syndication group. So we become kind of a sounding board for LPs that are looking at deals, and they want our help underwriting the deals. And a lot of times we'll take lead and they co-invest. That's a match made in heaven.
Rick, let's talk about the balance of ROI of making money, but also doing good. So, just in general, let's say within the family office environment and your direct investing, and kind of what you're looking to accomplish with your direct investing. There's just I'm not just talking about sustainability and ESG and philanthropy, but just that balance of really working hard to create high returns, but also thinking about where that wealth is going to go back into your team, back into your community, back into charities.
Yeah, um, we look at the financial returns from an investment perspective. I think philanthropy and investing are separate. I know there's a lot of social investing going on right now, um, which is fine if that's your family's ethos and what you want to do. But we underwrite for financial returns on financial investments, and then we look at the philanthropic giving. We do our own ROI analysis on that. The the biggest thing we focus on is our core values are family, finance, and fun. And when we look at a deal, if it's not good people, if it's not a fun and interesting space, um, we're not going to enjoy it, then we don't do it. I won't do the best deal in the world if I don't like it, if that makes sense. I won't do the best deal in the
Yes, that does
world,
make sense.
financially, the best deal in the world, if I don't trust and respect the people doing it, the managers, running it. Um, that that stuff matters to us. So, I mean, we look at the financial return with the people we're working with, and then if it's fun and interesting. There's so many opportunities out there. You gotta pick and choose where you want to spend your time.
Thank you, Rick, for that. It's very refreshing to hear you say that. And of course, it's not easy to factor in passion and integrity and deep due diligence when investment opportunities are moving quickly. So I think that's a very important element of the family office environment, is to focus on the integrity of your operating companies, of your affiliates, of the companies you're buying, and going deep in time with them, not just background checks, but actually personal time with them, because these are multi-year investments, right? You can't really divorce an operating company very easily. It becomes part of your life for several years, and I've seen you operate and talked about values with you, and I appreciate you bringing that up. Um, let's
I'll
move
give you a good
into yeah,
example.
yeah,
So
example.
I met an amazing entrepreneur through a friend of mine who founded Ring, and he said, "Will you meet with this entrepreneur? She's got something very interesting. I'd love your feedback." It's an ag adjacent deal. Okay. Well, in Missouri and frankly all through the Midwest, and now the biggest concern is the Great Lakes. The Asian carp have have gotten into the river systems, and they're killing all the other fish. And they're big. They're a delicacy in China. We export a lot back to China because their fisheries are all fished out. But this lady is harvesting the Asian carp out of the Mississippi, Missouri, and Illinois. And as St. Louis is the confluence of all these big rivers. So she's harvesting these fish and grinding them up into animal protein and making dog and cat food out of it. Versus right now, if you go in and buy, dog food or cat food from Purina, they're using up our food supply, salmon. Um, you and I aren't going to go buy Asian carp at the grocery store, but we do buy salmon. So why grind up the salmon into dog food if you can use Asian carp, which ironically has higher fats, which you want for your dogs? It's got higher fat content and the oils that you want in your dog for their coat and all that. So it's better to feed the dog the Asian carp than the salmon, and you're not cannibalizing our human food supply. So I'm fascinated by this. It does something good because you ask good, doing good versus doing well, the ROI. Well, it's a phenomenal margin profile. She needs help, which I'm an industrial engineer, grew up in factories, love factories. She's building a factory. I can help with people to run the factory. We want to do fishing tournaments. Jamie was all geeked out about this. He actually was the best deal that didn't get funded on Shark Tank, and then obviously did very well and sold it to Amazon. He just went back in as CEO, by the way. Um, but he invested on Shark Tank in a female entrepreneur that was doing sustainable um, hog farming in Missouri, and now he's built that business up big. So he met this entrepreneur and asked me to meet with her. And now we're thinking about doing, fishing tournaments and doing like make it a sport to harvest these carp to then turn around and grind it up into animal protein. And the reason I tell the story is this just hits all my buttons. It's a great, margin profile. It's a very talented entrepreneur. She a Goldman Sachs banker, and now she's gone down this path. She's a Wharton MBA and just a rock star. But I asked her the final question I asked, "Why are you doing this?" And she just went on about how passionate she is about the environment, and she knows she has to make money to satisfy investor requirements, and she can't build a successful business doing something good for the environment if it doesn't make money, which I think a lot of people miss. There's never they don't connect the dots saying this is good and understand that to get funded, you need to do well. So she's hit them both. So we're digging in on this one, and this could be just a fun run and do something really good for the environment and do well while doing it. And if you do well, you can keep growing it, investing in it. And, that's what I tell entrepreneurs is make a bunch of money and we can keep making it bigger and better and do more things. So that's kind of the story on that.
That's a good one. Thank you for that. And the I guess the expansion and the scalability of private companies as with a family investment backer is very relevant and important, right? Because the family office backer, as opposed to a fund, has more flexibility, and then you can compound. You can add other companies. You can hire more people. You can pivot the strategy. That's all very relevant. Thank you for bringing that up.
Well, that's
Let's
a good
move.
point and something to
Yeah,
talk about because
yeah,
the difference in taking family office money is it's long term with typically a mandate to do a specific thing. And our mandate is we don't need an exit. We don't need the money back. We want to enjoy the journey with you. We want to help where we can. We want to have fun. And, you know, as a manager wearing my FinTop hat, I get called every day saying, when am I going to get money back? So you have to sell stuff if you're a manager because that's how you get paid, and you typically are looking for a 3 to 5 year window. So if you partner with a private equity firm, you are signing up to run hard, run fast, and you're going to have a new boss in 3 to 5 years, even if you don't want to sell it. So if you want to invest for the long term, that's not that's not a traditional private equity approach. There's firms like BDT that are starting to run these 16-year funds, and they can hold companies for 7 to 10 years, and they manage their LPs saying don't expect money back right away. That's not what we're doing. We're building longer term value. But I tell people we could, if everything if everyone's happy with each other, we could still be in business in 20 years. And you can build long term value if you can run a business for 20 years. So I like what you said about investing in the business and the people, and it becomes generational versus a short period of time where you do the best you can and flip it over to somebody else.
that's good. Thank you for enhancing that. I think there's the term of generational wealth, but there's also like generational investing, right? Like you're saying, is if BDT is a great example, Harbor Group in St. Louis, type, hybrid type of firm. I think it's really interesting topic, and I do cover it on the podcast, and it's increasingly relevant. So I encourage people to think about that point of view from the family offices to look at that generational investing across different CEOs, different strategic plans, different roll-ups, consolidations. This is where the significant wealth multiplier is created on a tax efficient basis as well. Okay, so moving on to, let's say, value systems, the last topic we'll cover today. Um, we've touched upon this a bit of thinking about enjoying your investing, your passion, and caring for your people. Maybe just talk a little bit about the value system that imbues itself within your family office investing. That would be really wonderful to hear your point of view on that value set.
And I go back to the core values I talked about earlier, the family, finance, and fun. Like, I'm not going to work with somebody that I wouldn't want around my family. It's the extended work family that we've all talked about for a decade. And if I don't want you at dinner at my house, then I shouldn't be working with you. So I think that's a very important thing. On the finance, it's if people are money motivated, and not passionate about what they're doing, I don't I have not had good experience working with people that are just looking at dollars. They're not happy. They don't grind it out. When things don't go the way they're supposed to go, they start looking for opportunities. And that's fine. That's their choice in life. If their North Star is money, I just haven't had good experience with people that, have the picture of the, Global Express on their wall saying that's my goal, because any business has the ups and downs. And I mean, look at the stuff going on right now, the tariff stuff and all. You just don't know what's coming at you, and you got to react. But people that have that higher purpose, many times there's a spiritual side to it. There's the greater good. They're trying to solve a problem that they're passionate about, and they're going to win at all costs, meaning they're just going to grind until they figure it out. That intellectual curiosity, I think, is where success lies.
Rick, thank you for that last piece of your point of view. Really appreciated and very admirable and important for everybody to think about. Um, so, about you, how would you like people to reach you? You're working on a couple different things. What is the best way to contact you? And also, what are the things you're interested in right now within the family office at Holton?
Best connection is probably LinkedIn. Um, yeah, sending a LinkedIn message. It's Rick Holton is the LinkedIn. The My buckets. I've got a focus on senior living. All my friends, parents are aging, and I'm watching. The silver tsunami is happening. That's great in wealth management with the $75 trillion of wealth transfer. I feel like our generation is a working generation and not knowledgeable about wealth and how to manage it. Um, the downside of it is there's hundreds of thousands of beds that need to be built right now to accommodate all of these seniors. The big trend, and I'm involved in it right now, is aging in place, meaning keep your house. And there's all these businesses now to senior proof, like we all baby proofed our houses. Now you're senior proofing houses to accommodate our parents because there's just not enough beds to accommodate. So there's going to be another building boom. It's very challenging right now because there's not enough people in the trades to build all the inventory that's needed. So I'm involved with my board meeting tomorrow is the only data provider on senior living. So thematically, I'm involved in a lot of senior living stuff. I have an art company that does art and signage for senior living uh, facilities. So I'm very focused on senior living because I want our seniors to be cared for, and over the next 5 years, they just can't be. There's not enough providers. There's not enough beds. It's a scary proposition. Um, I talked about the wealth management platform. That's something I've worked on. I've known the founder from YPO for, I think, 8 or 9 years now. We've been very good friends. We have the same values, and so we joined with another YPO guy who's been in the family office space for 20 years, and we're putting this MFO together with a focus on, um, the estate planning. That's sort of the most important thing that people haven't done. Why give your money to the government when you die? Give it to your kids. So you start with estate planning, and then you get into the other family office services. We've got tax compliance and advisory. We've got a law firm that is affiliated with us. You got to keep them separate, but they're affiliated with us to help with the estate planning, but then also the tax planning um, inside the year. There's an estate plan, and then there's the ongoing tax planning on different things, and then bill pay and travel. And household management and, jet management, all that stuff. So that's all the stuff we're working on there. And then, I'm backing off of venture myself. I think by 26, I'll be, part time on venture. Um, I believe in managers to do the heavy lift there and co-invest with them. It's a lot of work. Um, and when I was younger, it was fun doing all the travel and the work and everything. But I want to slow down on that part of it and get more focused on the things I'm doing. So that's kind of the way I'm bracketing my time, if you will. Um,
Yeah, makes a lot of sense, Rick. And also, our families are important as the kids get older. Thank you for all of your wisdom today. I'm really happy to have you on the show finally and to see you many times this year. I'm excited to watch Holton Capital. Um, Everybody can reach out to Rick for elements for private investing that are relevant to Holton Capital, as he noted. And it's really great to have you on the show as we cross over, G1, 2, 3, going from more traditional operating companies to early stage companies, and then of course you're incubating and funding and building some earlier some sort of de novo businesses, and also thinking strategically about the themes that are relevant in today's society. So thank you so much for joining today. I hope you enjoyed it and really appreciate your time.
you bet. It's a joy chatting with you always.
All right, Rick, we'll wrap up. This is R. Adam Smith for the Family Business Audiocast. Stay tuned for the next episode on LinkedIn.